Unlike anything else on radio today, it's a front row seat for great information with today's leading experts. The Millionaire Maker, Hilary Kramer.
Lonnie Perkins, Happy New Year to all. It is our first live Money Monday of the new year, and we are glad to have you with us here on the 9th of January. 1 week ago, it was the official holiday, but my co-host says, why were we on tape? I should have been here live because I could have been helping people on January 2nd get ready for the new year. And that's all she cares about, friends. Hilary Kramer, all she cares about is helping you do better. Hello, Hilary. Happy New Year to you.
Oh, Happy New Year, Kevin. Happy New Year. And I think we're going to see a much better year. The statistics show that when you have a year like we just went through, down 20% on average, if you average all of the indices, there's an 81% chance that we're going to be up this year.
Wow, that's pretty good. That's more encouraging than what my portfolio said today. I'll tell you that much. So let's talk about a few things. We'll get to the outlook for the year in just a second. But in the immediate, there seemed to be some momentum early this morning. Everything was green, 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 go, go, go. They ended up a little bit down. And I'm not saying it was like terrible. It was less than a point, I think, on every indices. But considering how strong the early portion of the day was, it does seem a little surprising to me that they ended up in negative territory today.
Well, you have Powell, who's speaking tomorrow. So our Fed chairman, everyone's waiting to see what he's going to say about the next rate increase. And at the rate we're going, it's really serious. And I think the best way for me to explain why the market turned, slumped, at concerns, because obviously his speech is leaked ahead of time, or there's some, kind of helping the market out.
The juicy tidbits are let out. Yes.
So sometimes it's, quid pro quo, but it's also, to kind of keep some semblance of calm in the market. So we lost some from the right. You sell on the room, you buy on the rumor, sell on the news, or sell short on the rumor. But car payments, there was a jump in car payments of $1,000 or more. We have hit an all-time record. 15.7% of all auto payments monthly are over $1,000. Okay, that was in the fourth quarter, which would be October, November, December. Seriously, that is really incredible. And then for used vehicles also hit their $1,000 monthly payment, all-time high. Never, ever, ever had it been 5.4%. Nothing close to it. It's usually like around 1% or less.
Gotcha.
The used one. So anyway, why did I go through that? Because it tells you how expensive everything is and what happens when rates, are. When the pendulum swings too much in any direction, right? By the way, I just have to add, your car payment goes up. It's not a mistake that the two biggest headlines really over the past weekends are the feature stories. One was the car payments going up, all-time high. The other was the sleep business has hit $5.1 billion, and that was in 2022. Expected to go to $6 billion, in the coming, very, very quickly. So people aren't sleeping, and they're paying more on their car payments. And they have to worry about the WWE.
Yeah, no, that's true. Well, let me ask you about this, Hilary, because earlier today I was reading headlines, and there is an expectation that home mortgages may see a little bit of a drop, or even a pullback already. I think 6.5 was the number that I saw in the home mortgage arena. Is that good news that it came off a little bit from where it was?
Oh, it's very good news, but in relative terms, we're still, we've still more than doubled. When we have Steve come on in the next segment, Steve, Wonder Whiz kid on the Fed and all of that. I think that we need to do some discussion.
We'll put that question
to
him.
Yep.
Yeah. Okay. Very good. Well, we've got a packed show tonight because we have Steve Madonna joining us. We have Scott Martin. He likes to fancy himself as the master of the boring stuff, but
but he's really not. That's the funny part.
Well, that's what I'm going to say. Like, he's helped me a lot, so I don't know how he judges himself in that manner. But let me just ask you, Hilary Kramer, guru, millionaire maker, financial advisor to the stars, 2023. has what written on it from where you sit? What do you anticipate? What are you thinking? Where are you seeing the landmines, especially in quarter one? What are people needing to be aware of?
Bankruptcies, brick and mortar having done a lot worse than was even expected, inventory buildup, how much inventory really moved through the system. We haven't gotten the full picture yet for the holiday season. Plus, it's not just presents, it's the ancillary, right? It's the ham someone bakes or how many trips to Home Depot for decorations. So
right.
there's a lot for us. That's our big first landmine that we have to get around. And you're going to see some of these companies.
And do you anticipate that coming in at under where it should have been?
Oh, it's gonna be horrible. Macy's is already kind of like getting us ready, right? They're ahead of time, but what we're going to see is it's going to be ugly. And Kohl's has just been hanging on. Let's hope Kohl's makes it.
I have to admit here, maybe I'm part of the problem, but I did not replace my Christmas lights this year like I sometimes do year after year. I used the same ones as last year and just added a set or two.
See,
so if you multiply me by 2 million other people, that's a drag on what they should have done.
It's amazing how many people didn't go for the new China this year, right? There's how many people kind of just kept it small, kept it simple,
Yeah.
So, but there are some really good stocks out there. I do want everyone to be aware that there's some broad-based buying that some of the big, hottest mutual funds have been doing, and they've been buying across the board, and I'm very pleased to see that kind of breadth. When I say across the board, it means the biggest, most successful mutual funds, they're buying everything from Crocs to Deere, the big manufacturing equipment. They're buying United Rentals, URI, which always comes up every time we, kind of go out there looking for a good, solid stock for everyone. So that's all very good. There's still trillions of dollars on the sidelines, and that money is, starting to move and rotate around. But let's see. I didn't see any oil companies on that list that's like 100 stocks long of who the big funds, what the big funds are buying. I think they see that run is over. So I hope people didn't jump into it too late. Because really, everyone instead is, if anything, they're buying Tractor Supply and they're buying Ulta Beauty and graphic packaging. Anyway, and we'll also see what happens with technology. Kevin, you say, what do I see when I look at 2023?
Yeah.
And, after we get past earnings, I'm looking down at the great abyss, just wondering what can fall that we don't know, what can happen beyond the bankruptcies. And we really have to, in many ways, you're never supposed to have the word pray or hope in a sentence talking about the stock market ever. But I think that we do have to pray. We really do, that we don't have any man-made or natural disaster of any sort that brings us down. And we got to be really, really hopeful that over the next few days that the holiday season didn't bring this triple-demic all over the United States.
So, Steve, what's going to happen tomorrow?
Tomorrow, Jerome Powell is going to speak at the Central Bank of Sweden. The market, maybe one of the reasons why it sold off late today, was a little bit nervousness about that. I don't know they can really say anymore to surprise the market. They know he's committed to tightening. He left himself a little more wiggle room the past few meetings, and I expect him to do that again. But they're very serious about the inflation fight, and they're not going to give it up now, even with, pretty sure signs the economy is slowing. Now, the market anticipates this a little bit, and you've seen some decline in long-term rates. You do have a, inverted yield curve right now. If I think a 2-year yielding 4.2%, the 30-year around 3.7% or so. So, the bond market is anticipating the decline of interest rates, and eventually we'll get that, although it's probably not going to come at least for the first 6 months this year. I think we're going to have to see a recession before we get any Fed cuts this year.
Really think you really think recession is what we need to see, or do you think we need to see a really ugly day, ugly day in the market?
I think you'd have to see a recession, Hillary, before you'd actually get Fed rate cuts. Now, you may get the Fed just to stop raising rates. I mean, heck, we're already at 4.25%, 4.5%. So how much more are they really going to raise? There may be a couple quarter more point raises, but at that point, that's going to probably be it, especially with signs the inflation is slowing. And don't forget, we have huge budget deficits to finance, and they get much higher. It's going to make since the Treasury borrows so much short term. It's going to make things difficult for them.
No, and it makes it difficult to find stocks. We've talked about a company, Sunrun. I just have to bring it up, and I know I wasn't going to in this segment really talk stocks, but I just can't help myself.
We were chatting about it before the show tonight.
Okay, Sunrun is this sales company, installation. They do the development of solar energy projects that you put on your house, on your roof, and Sunrun has gone to the next level. RUN Sunrun, because the roof. Silicon is also generating energy that's used for your electric vehicle. And then whatever's left is stored up in batteries. It's really kind of pretty incredible. So I would say, I just wanted to tell everyone, just when you think there's no hope, the macro investing, you have this combination of high costs for energy in combination of tax cuts and considerations. Combined with the hot trend of electric vehicles. And that's where you get companies like Sunrun that at 23 might one day be able to go back to their high that they had in October 2020 of $72. And it's $22
right now.
And
they're at 23 right now.
Yeah. So what I'm just trying to tell everyone is when you think you can't make it, you have companies like Sunrun and people who I think know, not necessarily analysts, but those that really understand the segment and understand Tesla, understand that we could be sitting at $100 for Sunrun, which is at 20 now. But that being said, I will hope maybe Steve would join us for the next segment too, because
Steve, you got to stay with us as long as Hillary asks you to.
Thunder. I'm sorry,
Hillary,
Steve.
let me ask you this, because
Steve's
we've
smiling.
talked a lot
I love when Steve smiles instead of yells at me. I just want everyone to know that there's been this history where I don't make the decisions and then everyone has to follow. We are consensus builders, and if I say I'm interested in a stock, I say I'm interested in Ironwood Pharmaceuticals. That's good. Okay, we're not going to say what that one's good for. Genuine Parts. I like GPC, Genuine Parts. If Steve says no, and gives me 2 data points or 1 data point on it, it's over. We look for the next stock. And that's what I think makes the Kramer franchise very, very special.
Yeah. So let me ask you about this, because over the last couple of years, you've been very hot on EV. Not just Tesla, but Ford with the F-150 has proven to be something that people have really been excited about, and of course you've not had a better environment for someone pushing electric vehicles than a totally green administration that has said, hey, let's do it. And I even think overplayed his hand and pushed too hard in many respects to get there. But are you telling me tonight that Microvision and Sunrun and some of these guys, like, it's just not the time, and we should buy and hold, or is it where are we at now with that?
With Sunrun, buy Sunrun now. Buy Sunrun now. That would be my vote there. Look, it was down as low as $8 in January 2018. And then since then, it's buy Sunrun, put it away, wait and see what happens. There are other stocks that you don't want to just jump into. There are some of the big REITs that are doing things that make sense not to be buying right now. Then you have other REITs like EQR, which everyone knows I love so much. Sam Zell owns EQR. EQR stands for Equity Residential. You get a 4.3% dividend yield from a true REIT that has all positives here. 64% gross profit margin, return on equity 11%. But that all of those numbers are just phenomenal. And the stock is down 35% over the past 1 year. But I think everyone should be looking at this company that's focused on building these multifamily residential rental apartments in the Washington, D.C., Southern California, Los Angeles area. People aren't going to be able to, what did you just tell us before, Kevin? People can't afford to give up their cheap mortgage, right? So if you won't give up your cheap mortgage and someone else wants to move, they're going to end up in these fancy places.
Yeah. Well, let's take a break, and when we come back, we will add one more voice to the conversation. Steve Madonna and Hilary Kramer and Kevin McCullough with you, but Scott Martin joining us for the next couple of segments as well. It is Money Night on Radio Night Live. Don't go away.